Major changes are shaking up Canada's retirement income landscape in 2025. And if you receive CPP, OAS, or GIS benefits, you need to hear this. The federal government has confirmed that a full-scale pension overhaul is now in effect, reshaping the way millions of Canadians will receive their retirement income going forward. From new contribution rates, to benefit increases, to expanded eligibility for the Guaranteed Income Supplement, this isn't just a tweak, it's a full transformation of Canada's retirement system. Let's be absolutely clear, these are not optional changes. Whether you're already retired, planning to retire this year, or you're still in the workforce contributing to CPP, these new measures will directly affect your financial future. And if you're over 60 or close to it, then these changes are already happening for you right now. Payments are being adjusted, eligibility thresholds are shifting, and your take-home retirement income may be going up, or possibly down, depending on your situation. So, what's going on? What exactly has changed in 2025? Why now? Who benefits? And most importantly, what do you need to do to make sure you're not missing out on hundreds, or even thousands of dollars in new pension income? Don't go anywhere. In this video, we're breaking down every major update to Canada's three core retirement programs: CPP, OAS, and GIS. We'll explain the numbers, the timelines, and the impact in plain English so you can make sense of what's hitting your bank account this year. We begin with the Canada Pension Plan, the foundational retirement pillar for most Canadians. As of January 1, 2025, CPP has officially entered Phase 2 of its long-term expansion strategy. This is something the federal and provincial governments agreed to years ago, but we're only now seeing the full effect. What this means is that CPP contributions have increased again this year, and with them, payouts are being enhanced. Here's the key detail. There is now a second earnings ceiling added to CPP. Previously, you only contributed to CPP on earnings up to a certain limit, around $66,600 last year. But in 2025, there's a new upper earnings threshold of $73,200. If you earn above the basic limit, you now pay an additional CPP contribution on that extra income. The idea is that, by contributing more, you'll be eligible for a higher CPP pension payout later in life. The maximum monthly CPP retirement benefit for someone starting at age 65 has now risen to $1,364.60 per month, or over $16,300 per year. That's an increase of more than $500 annually compared to 2024. And remember, this is just the maximum. Most Canadians receive less than that, because actual amounts depend on how much you contributed and for how long. But the overall trend is clear. Higher contributions now mean higher payouts later. So if you're still working and see a higher deduction on your paycheck, don't panic. That extra deduction is being invested directly in your future. And if you're already retired and receiving CPP, expect to see a notable increase in your monthly benefit, especially if you're one of the Canadians who delayed CPP past age 65. The postponement bonus remains in effect, giving you an 8.4% boost per year for each year you delay, up to age 70. Let's now turn to the Old Age Security Program. This one has seen some of the most talked about changes in 2025. OAS is unique in that it's not tied to how much you worked or contributed. It's based on residency. And for millions of Canadians over 65, it's a critical monthly income source. In 2025, the OAS maximum monthly benefit has increased to $718.33 for those between 65 and 74 years old. For seniors 75 and older, the amount is even higher, $792.35 per month, thanks to the 10% permanent increase that came into effect back in 2022 and is now fully indexed. But the most significant update in 2025 isn't the basic increase. It's the restructuring of the OAS clawback threshold. Previously, if your income exceeded around $87,000, your OAS payments would be reduced gradually. This year, that threshold has been increased to $92,700, which means more middle-income seniors will now be able to keep more, or all, of their OAS payments. That's a huge win for many retirees whose modest investment income or part-time earnings previously triggered reductions. And there's more. The government has also introduced automatic retroactive top-ups for low-income seniors who were previously underpaid. If Service Canada's updated income data shows that you were entitled to more OAS than you received last year, you will now get a lump sum payment, automatically, no application required. This correction is being rolled out starting this April, and many seniors have already reported receiving direct deposits marked OAS adjustment. Now, let's talk about the Guaranteed Income Supplement, the GIS. This benefit is aimed at the lowest income seniors, those who rely primarily on OAS and CPP, but have little to no additional income. For many, GIS makes the difference between making ends meet or not. And in 2025, GIS has undergone a massive eligibility expansion. First, the income thresholds have been raised, meaning more seniors now qualify. For a single senior, the new annual income cutoff has been increased to $22,000, up from about $21,000 last year. For couples, the joint income threshold is now $29,600. If your income falls below these amounts, you're eligible for monthly GIS support that can reach up to $1,065.47 for singles. That's over $12,700 per year, and it's completely non-taxable. But the big game changer is the GIS employment exemption. Starting in 2025, seniors who work part-time can now earn up to $10,000 per year without seeing their GIS reduced. Previously, even modest employment income could reduce your GIS payments. Now, you can earn a part-time wage without penalty, giving thousands of seniors a reason to re-enter the workforce or stay active in retirement without losing benefits. This is part of a broader strategy from the federal government to encourage financial independence among seniors, while still supporting those most in need. The message is, if you want to work, great. If you can't, we've still got your back. And in an unexpected but welcome twist, there's also a new GIS fast-track system for low-income Canadians turning 65. Instead of requiring you to apply manually, the government will now use your income data to automatically enroll you in GIS once you qualify for OAS. No forms, no waiting. This change is expected to benefit more than 65,000 new seniors in 2025 alone. Now, you might be wondering, how does this all impact combined retirement income? Let's take an example. A 70-year-old retiree who worked a full career and is now receiving full CPP, $1,364.60/month OAS, $792.35/month and qualifies for a partial GIS benefit of around $250/month. That retiree could now be looking at total monthly government income of over $2,400. That's more than $28,000 per year, all indexed to inflation. Not a fortune, but for many, a significant improvement over previous years. Now here's where things get serious. If you're not paying attention to these changes, or if you're relying on outdated assumptions, you could be leaving hundreds or thousands on the table. Many seniors are still unaware that they qualify for GIS. Others assume they've missed the CPP maximum because they retired early or worked part-time. But the new CPP enhancements mean that even partial contributors will see higher payouts over time. And don't forget about retroactive benefits. If you delay applying for OAS or GIS, you may be able to receive back payments of up to 11 months' worth. But you need to act. The systems are improving, but not everything happens automatically. Sometimes a simple phone call or online check-in can reveal hidden entitlements. So here's what you should do right now. Step 1. Review your current benefits. Check your monthly payments for any recent increases. If you haven't seen an increase, contact Service Canada and ask why. Step 2. Verify your income. Check if you've crossed any thresholds that impact OAS or GIS. If your income dropped last year, you may now be eligible for more support. Step 3. Apply or reapply for GIS if your financial circumstances have changed. Even a small drop in income could mean you now qualify. Step 4. If you're still working, understand the new CPP contributions. Make sure you're prepared for higher deductions, but also know your pension is growing. Step 5. Tell your friends and family. Many seniors don't have access to accurate information. A quick conversation can make a huge difference. We are living in a pivotal time for Canadian retirees. The 2025 Pension Overhaul is a signal that the government is trying to respond to cost of living challenges, demographic pressures, and the realities of aging. But systems like these are only effective if people understand how they work. That's why we're here, to bring you the facts in clear, practical language. And we'll keep you updated every step of the way as more changes are introduced, including anything new in the 2025 federal budget or upcoming provincial agreements on pensions and senior services. If this video helped you, make sure to subscribe, click the bell icon, and stay in the loop. We cover CPP, OAS, GIS, housing grants, and more, because your retirement security matters. And if you've seen these changes affect your payments already, let us know in the comments. Sharing your experience helps thousands of other Canadians. Until next time, stay informed, stay empowered, and take care of yourself and your loved ones. This is your retirement, and you deserve every penny of it.